It's another edition of your weekly business companion, The Portfolio. I'm Vivian Idekpefo. President Muhammadu Buhari met with President Donald Trump of the United States of America in what many describe as historic, more so because he is the first African president extended such invitation by President Trump. So, it has been a busy week filled with lots of activities, starting with the Federal Executive Council's approval of 68.6 billion naira for improvement of critical infrastructure and 10.7 billion naira for rice mills. Still in the week, the equities market closed the month of April on a positive note, with foreign portfolio investment hitting $17 billion in the first quarter of 2016. Similarly, the Federal Inland Revenue Service recorded 1.171 trillion naira in the first quarter of 2018, representing a 51% increase compared to the same quarter in 2017. The program is The Portfolio, where we x-ray issues that touch on the economy, finance, and the business world generally. Right, let's get down to business as we join Comfort Amodu on the business news segment.
Thank you, Vivian. Welcome to the business news. I'm Comfort Amodu. President African Export-Import Bank Benedict Orama says the success of the African Continental Free Trade Area is dependent on the ability of the continent's private sector to generate its own goods that will enter the trade. The President African Export-Import Bank, who stated this while addressing Egyptian business leaders in Cairo, said the ACFTA would also depend on how the private sector in one market was able to identify and realize opportunities in other markets. He highlighted the need for the private sector to take advantage of the opportunity inherent in the AFCFTA, as its nearness to major markets in Africa offers a tremendous opportunity for accessing the abundant raw materials and other intermediate goods from other African countries for further processing and export at competitive rate. He said the African Export-Import Bank had championed the growth of trade and investment flows between Egypt and the rest of Africa by providing about $5 billion in trade financing to Egyptian entities in the last 3 years and launching a $500 million Egypt-Africa Trade Promotion Program in 2015. And Nigeria is set to export goods worth $40 billion to other African countries annually without being documented. This, according to the Executive Director of the Export Promotion Council, Mr. Segun Awolowo, largely affects the economy of the country, hence the need to partner NACIMA to formalize the trade. He noted that the Council has concluded plans to organize buyers' market all over the world to penetrate the global market and create market for the SMEs in line with Nigerian Export Council's vision to make the world a marketplace for Nigerian products. The Managing Director and Chief Executive Officer of the Asset Management Corporation of Nigeria, Mr. Ahmed Kuru, says the aviation sector accounts for 90% of the about 181 billion naira non-performing loans purchased by the Asset Management Corporation of Nigeria. The Managing Director, represented by AMCON's Senior Vice President Kamilu Omokide, said the meeting focuses on AMCON's intervention in transport and allied sector, achievements, challenges and prospects, and how to reposition the companies to enable them generate adequate cash flow and exit the companies it took over once the owners paid up their debts. Moving on, the federal government has affirmed its commitment to the global fight against the financing of terrorism. The Minister of Finance, Mrs. Kemi Adeosun, disclosed this at an international conference against the financing of terrorism in Paris, France. The conference, which had its theme as "No Money for Terror, was hosted by the French President Emmanuel Macron and was attended by the Managing Director of the International Monetary Fund, President of the World Bank Group, Jim Kim, U.S. Treasury Secretary, as well as UK Chancellor Philip Hammond. Adeosun, who represented President Muhammadu Buhari at the conference, said the country was reinvigorating efforts to tackle the financing of terrorism. She said the government is also monitoring the formal channels of finance through the Nigerian Financial Intelligence Unit and other bodies that can be used to sponsor illicit acts. That's it on the news. Portfolio continues. I'm Comfort Amodu.
Thanks for the updates, Comfort. Now, Nigeria is the 56th largest goods trading partner of the United States of America. Data indicates that in 2016, the U.S. exported goods worth $1.9 billion and exported goods worth $4.2 billion, leaving the U.S. with a trade deficit of $2.3 billion with Nigeria. Some say these numbers are deceptive because U.S. imports are made up mainly of crude oil. Joining me to look at bilateral trade relations between Nigeria and the U.S. and its effects on the Nigerian economy is George Agbakai, a development expert and President, African Democratic Alliance. You're welcome to the portfolio.
Thank you for having me.
The announcements of the invitation by the U.S. President to President Muhammadu Buhari generated discussions at various levels. I am wondering, could this invitation be in response to increased Chinese investment in Nigeria in the last few years? I mean, $3.8 billion investment from the U.S. and $13 billion of Chinese investment in Nigeria. The difference is huge. What's your take?
Well, I believe the U.S. relationship, with the previous administration in Nigeria has been a little bit lukewarm, especially because of allegations of, human rights records of the Nigerian military leaders in respect of the Boko Haram situation, coupled with the, Chibok girls, and issues of corruption, that was leveled, against a lot of government establishment in the previous administration. But in this current administration, the relationship between the U.S. and Nigeria has been very great. President Buhari's visit to the United States is a great one. He's the first among African leaders that was invited to the United States. And this is the very first time in close to a decade, that a Nigerian president has been honored in the United States. I think it's a thing of great joy, not only to Africa, not only to Nigeria, but to Africa in general. Definitely, there are a lot of goodies that would come with this. Certainly, there is already an improved diplomatic relationship with the United States. And the issue of trade certainly will increase. We understand that the trade imbalance between Nigeria and the United States, is very high. But with this particular visit and with the new relationship that President Buhari is forging with President Donald Trump in the U.S., I believe things will go a lot better in terms of trade, in terms of investment. So those are the issues at this point.
Now, Nigeria was the leading AGOA exporter in 2016, with more than $2 billion worth of exports to the U.S. under the African Growth and Opportunity Act, that is AGOA, enacted in 2000 to facilitate access of African exporters to the U.S. market. Do you see this visit strengthening AGOA, Nigeria, that's with respect to Nigeria?
Well, the African Growth and Opportunity Act which came into being in the year 2000, as we all know, is a way of helping African states in the sub-Saharan Africa to be able to export their goods, to the United States. But unfortunately, it has not worked pretty well because of several challenges. Most of the requirements put in place by the United States government in this act is not in line, with the development of the African economy and sub-Saharan Africa in particular. Like we are lacking, in some of these requirements.
What are these requirements, some of these requirements, if I may ask?
Some of these, they talked about local content. Apart from the local content, they also, talked about, processing mechanisms. Apart from processing mechanisms, there are other issues. And Nigeria and sub-Saharan Africa do not have the infrastructure to be able to meet up these requirements. For example, there has been instances of some of the African, even agricultural materials, sub-Saharan African countries, trying to export their agricultural materials, to the United States. Unfortunately, at the entry port, they found out some, balls and, insects, in all these, agricultural grains. And that poses a problem. Also, we are talking about the quality of some of these goods. We all know in Nigeria that Abia State and Aba in particular, is a bedrock of, manufacturing of goods like shoes, textiles, but according to the U.S. government, some of these, materials that are produced in Aba doesn't meet up that requirements, in terms of processing, in terms of even packaging, those are the issues. But however, with the new relationship we are forging with President Trump of the United States, we are looking at a situation where he can be able to reduce some of these requirements so that sub-Saharan Africa can be able to, export their goods, to the United States. When you look at this situation, you see countries like China, and, other Asian countries, Singapore, Malaysia, they've made a huge inroad into the Nigerian economy. Our trade with the United States in 2016, according to statistics, was about $6.07 billion. Out of $6.07 billion, about $4.2 billion, are imports, from U.S. And you find out that some of these imports are related to oil products. You understand what I'm saying? Whereas Nigerian export to the U.S. is merely 1.9 billion. And that's a great disparity right here. So we want a situation, we want trade actually with the United States, we want investment with the United States, but we want one that will be fair. We want one that will be equitable so that both countries will benefit. We know that with investment and trade, it will create enormous employment, of Nigerian youths, which is highly needed in this country. So those are the issues.
Now, you did talk about a reduction in the requirements for exports into the U.S. But one would think that instead of reducing the requirements, it presents an opportunity for the private sector to step in, and set up some of these value chain development facilities that are needed to meet these exports requirements.
Well, I think that's a pretty good point. But in the Nigerian situation, we all know that the government as a whole is the major, in the area of capital. Unlike in the United States where there is private ownership of means of production. In the Nigerian context, government virtually owns everything. You know, okay, let's talk about this issue of processing, storage facilities. If you go to the US, for example, there are private enterprises that are in charge of storage. There are private enterprises, their own duty is processing. Then there are people that, you know, produce the agricultural raw materials. You see what I'm saying? So that's why it's a lot easier. You know, you see, you go to US, you buy oranges, you buy tomatoes, you know, that have been there for months without spoiling. But in the Nigerian situation, just go to the market and buy oranges, there is no storage facilities. Instead, in Nigerian context, Ministry of Agriculture will try to build storage facilities, build processing plant. These are things that private enterprises should do.
Which means the private sector is not living up to its role.
When you talk about enabling environment, you also talk about loans from bank. Loans, for you to get a loan from the bank, even small-scale businesses, is not possible. They want collateral, they want this, they want that. But go to US, go to Britain, and other Western powers, a small-scale business can easily get a bank loan based on his good credit rating. Not to talk of, you know, getting, you know, buildings, getting houses, getting this for you to be able to get a loan. That is not the case here. So government need to look at, you know, availability of loans to businessmen. Government need to provide, you know, infrastructures, you know, for private enterprise to function properly in this great country.
Now, you have lived in the United States for so many years, and so you have an idea of what the American market is like. Nigerian businesses have faced lots of bottlenecks in penetrating the U.S. market. Do you think that this visit will bring some respite to Nigerian businesses, particularly exporters?
It was President Trump that invited President Buhari to United States. Buhari didn't just go there on his own. So this shows that United States has enormous regard for Nigeria as the largest African economy, you know, and a country, you know, politically and militarily is one that you cannot joke with in Africa. Because look at it seriously. In geopolitics of Africa, when you talk about the West African sub-region, Nigeria is there. You talk about the North African sub-region, Egypt is there. Talk about the East, Kenya, and Southern Africa, South Africa. But you have come to find out that because of President Buhari's pedigree, you know, he's seen as somebody who is straightforward, you know, based essentially on his anti-corruption crusade. This is what he's known for all over the world, as a straightforward person who doesn't like corruption. So let's see if there will be a lot of changes. America never came to Nigeria because of all the issues like corruption, you know, and other factors. But we'll see if things will come to change, you know, because there are problems in South Africa where the President Zuma was disgraced out of office. The election that was held in Kenya was very problematic. And, you know, in Egypt, there has also been democratic problems where opposition people were locked up and there was a sham election in Egypt. So Nigeria is the only country standing tall. So America is looking at Nigeria. They're all looking up to Nigeria to be like the savior of Africa, you know, and more importantly, in the West African sub-region. So these are all the issues. Nigeria is needed by the United States to promote peace, you know, promote economic viability in the West African sub-region. If you look at ECOWAS, for example, the budget of ECOWAS, the GDP of all ECOWAS countries, Nigeria has probably 70% when you check the ratio. So Nigeria is a country that no advanced country will joke with. And President Buhari did a very good job. He stood toe-to-toe with President Trump. He was pretty eloquent. You know, he understood the subject matter. So he really made Nigeria proud and Africa as a whole.
Now, this visit is coming just a few days after the president returned from Britain on another state visit. And what are your thoughts?
Well, it is quite clear that Nigeria is a country where all advanced countries want to be. China is basically in Nigeria investing heavily in other areas, investing in transportation, investing in health, you know, in aviation, investing in agriculture. So I believe the Western powers look at a situation where they are losing out. So I think that's probably one of the reasons, covertly, why you see this international politicking taking place between US and Nigeria. Because Trump doesn't want to be left out. Same with Theresa May in Britain. Because they know Nigeria, after all, is probably the 5th largest oil producer in the world. We have all it takes. You know, except issues that are inherent in our development, you know, such as corruption, mismanagement, maladministration, ethnicity. Those are the issues that are bringing us down. But Nigeria is up there, and this visit by Nigeria president to the United States has raised the international profile of Nigeria in the Committee of Nations.
Thank you so much for coming on the program Portfolio.
You're most welcome. I truly appreciate you having me.
I have been talking with George Agbakai, a development expert and President, African Development Alliance. Moving on now, let's take an update on activities on the capital market with Joy Uzo.
Welcome. It's another time to review the capital market performance for the previous week. Thanks for joining me. A total turnover of 1.825 billion shares worth 24.653 billion naira in 23,148 deals were traded last week by investors on the floor of the Nigerian Stock Exchange. The NSE All-Share Index and market capitalization appreciated by 1.05 and 1.34% to close the week at 41,244.89 and 14.940 trillion naira. Similarly, all other indices finished higher with the exception of the NSE Premium, NSE ASEM, NSE Insurance and NSE Industrial Goods indices that depreciated by 0.92%, 0.82%, 1.57% and 4.89% respectively. The financial services industry measured by volume led the activity chart with 1.360 billion shares valued at 14.642 billion naira traded in 12,118 deals, thus contributing 74.51% and 59.40% to the total equity turnover volume and value. The consumer goods industry followed with 124.816 million shares worth 6.910 billion naira in 3,709 deals. The third place was occupied by the oil and gas industry with a turnover of 112.479 million shares worth 1.389 billion naira in 3,429 deals. Trading in the top three equities, namely Law Union and Rock Insurance PLC, FBN Holdings and Zenith International Bank PLC measured by volume accounted for 581.018 million shares worth 7.098 billion naira in 4,283 deals. contributing 31.83% and 28.79% to the total equity turnover volume and value, respectively. Also traded during the week under review were a total of 56,260 units of exchange-traded products, ETPs valued at 376,387.48 naira, executed in 6 deals. A total of 725 units of federal government bonds valued at 660,984 naira were traded the previous week in 10 deals. 33 equities appreciated in price during the week under review. 41 equities depreciated in price, while 95 equities remained unchanged. And on the foreign scene, United States stocks benchmarks closed little change Friday and booked moderate losses for the week as investors expressed muted enthusiasm following strong corporate results even from some of the market's biggest companies. For the week under review, the Dow Jones fell 0.6% to 24,311.19, and the Nasdaq Composite lost 0.4% at 7,119.80. The S&P 500 closed down at mere 0.01% to end the week at 2,670.91 points. On the other hand, German and UK stocks led advances in European equities Friday amid weakness in the euro and the pound against the dollar for the week. UK FTSE 100 gained 1.8% to close at 7,502.21 points. German DAX rose 0.64% to 12,580.87, and the France's CAC 40 advanced by 0.54% to end at 5,483.19 points. That's it on the market segment. Many thanks for watching. I am Joy Uzo.
That does it on this edition of the program Portfolio. Remember to reach us on the platforms showing on your screen. Thanks for keeping a date with us.